Hey, what's up guys? Welcome back to my channel, where I share with you the best tips and tricks on how to make money from the stock market. In today's video, I'm going to show you 6 monthly dividend stocks that will pay your rent. Yes, you heard me right. These are stocks that pay you every single month, just for holding them. Sounds too good to be true. Well, stick around and find out. But before we get into that, let me share with you a quote from one of the greatest investors of all time, Warren Buffett. He said, "The most important thing for investors is to buy companies that have consistent and high-quality earnings." And what better way to measure the quality of earnings than by looking at dividends? Dividends are the cash payments that companies make to their shareholders, as a way of rewarding them for their loyalty and trust. Dividends are also a sign of financial strength and stability, as only profitable and well-managed companies can afford to pay them regularly. Now imagine if you could receive dividends every month, instead of every quarter or every year. How awesome would that be? You could use that money to pay your bills, buy groceries, or even save up for a vacation. Now you might be wondering, how can I do the same? How can I find monthly dividend stocks that will pay my rent? Well, don't worry, because I'm here to help you out. In this video, I'm going to share with you 6 monthly dividend stocks that have high yields, stable businesses, and growth potential. But before we get into the details of these stocks, let me explain what monthly dividend stocks are and why they are so awesome. What are monthly dividend stocks? Monthly dividend stocks are companies that pay out dividends every month rather than quarterly or annually. They tend to be rock-solid, established companies with predictable cash flows. Think utilities, REITs, energy infrastructure, stuff like that. These ain't no fly-by-night operations. The companies are committed to paying shareholders regular income. That income can be you, my friend. Why are monthly dividend stocks so dope? Monthly dividend stocks are stocks that pay dividends every month, rather than every quarter or every year. They are issued by companies that have steady cash flows and a commitment to regular income distribution. These companies are usually in sectors like real estate, utilities, energy, finance, or consumer staples. There are many advantages of investing in monthly dividend stocks. Here are some of them. They provide consistent monthly income that you can use for your expenses or reinvest for more growth. They offer reliable cash flow that reduces the volatility and risk of your portfolio. They appeal to income investors who need frequent dividends to supplement their retirement or other sources of income. They provide stability and peace of mind in times of market uncertainty or economic downturns. So how do you select the best monthly dividend stocks for your portfolio? Well, there are 3 main criteria that you should look at. Dividend yield. This is the annual dividend divided by the current share price. It tells you how much income you can expect from each stock per year. Stability of company. This is the ability of the company to maintain or grow its earnings and dividends over time. It depends on factors like the quality of management, the competitive advantage, the industry outlook, and the balance sheet strength. Growth potential. This is the possibility of the company increasing its earnings and dividends in the future. It depends on factors like the innovation, the expansion, the acquisition, and the market demand. Based on these criteria, I have selected 6 monthly dividend stocks that I think are worth investing in right now. These are 6 monthly dividend stocks that will pay your rent. Stock 1. STAG Industrial. If you're looking for a monthly dividend stock that can give you steady income from the booming industrial sector, look no further than STAG Industrial. This company is a real estate investment trust, or REIT, that owns and operates over 500 industrial properties across the U.S. These properties include warehouses, distribution centers, manufacturing facilities, and data centers that serve a diverse range of tenants, such as Amazon, FedEx, Coca-Cola, and IBM. STAG Industrial has a high occupancy rate of 96%, which means that most of its properties are rented out and generating income. It also has a long-term lease agreement with its tenants, which means that it can lock in stable and predictable cash flows for years to come. It pays a monthly dividend of 12 cents per share, which translates to a yield of 4.23%. That's higher than the average yield of the S&P 500, which is around 2%. But what makes STAG Industrial stand out from other REITs is its history of dividend growth. Since 2011, it has increased its dividend every year without fail. That's impressive, considering that many REITs had to cut or suspend their dividends during the pandemic. STAG Industrial has proven its resilience and reliability as a dividend payer, and it shows no signs of slowing down. So if you want to invest in a monthly dividend stock that can provide you with consistent income from the industrial sector, you should definitely check out STAG Industrial. It's a solid and stable company that can help you pay your rent every month. Stock 2. Realty Income. Another monthly dividend stock that you should consider adding to your portfolio is Realty Income. This company is a real estate investment trust, or REIT, that owns and operates over 6,600 commercial properties across the U.S. These properties include retail, office, industrial, and agricultural properties that serve a wide range of tenants, such as Walgreens, FedEx, Dollar General, and McDonald's. Realty Income has a high occupancy rate of 98%, which means that almost all of its properties are rented out and generating income. It also has a long-term lease agreement with its tenants, which means that it can secure stable and predictable cash flows for years to come. It pays a monthly dividend of $0.235 per share, which translates to a yield of 5.08%. That's higher than the average yield of the S&P 500, which is around 2%. But what makes Realty Income stand out from other REITs is its history of dividend growth. Since 1994, it has increased its dividend every quarter without fail. That's amazing, considering that many REITs had to cut or suspend their dividends during the pandemic. Realty Income has proven its resilience and reliability as a dividend payer, and it shows no signs of slowing down. So if you want to invest in a monthly dividend stock that can provide you with consistent income from the commercial sector, you should definitely check out Realty Income. It's a solid and stable company that can help you pay your rent every month. Stock 3. OXSQ Capital. Are you looking for a stock that can give you a juicy dividend every month? Do you want to invest in a company that helps small and medium-sized businesses grow and thrive? If yes, then you might want to check out OXSQ Capital OXSQ, a business development company BDC that does both. OXSQ Capital is not your typical bank. It is a BDC, which means it can offer more flexible and customized financing solutions to its clients, who are mostly middle-market companies in various industries. It can also enjoy tax benefits as it is required to distribute at least 90% of its taxable income as dividends to shareholders. OXSQ Capital has a diversified portfolio of debt and equity investments, including loans, bonds, notes, and warrants. It focuses on companies that have strong cash flows, stable earnings, and growth potential. It also invests in collateralized loan obligations clause, which are pools of loans that are sliced into different risk and return tranches. OXSQ Capital pays a monthly dividend of $0.035 per share, which translates to a yield of 13.5% based on its current share price of $3.03. It has a history of maintaining its dividend since 2017, even during the pandemic-induced market turmoil in 2020. It also has a low payout ratio of 58%, which means it retains enough earnings to reinvest in its business and grow its portfolio. If you are looking for a high-yield stock that can provide you with consistent income and exposure to the growing middle market segment, you might want to consider OXSQ Capital OXSQ as one of your options. Stock 4. Orchid Island Capital. Do you want to invest in a stock that can give you a hefty dividend every month? Do you want to invest in a company that has a low-risk and high-reward strategy? If yes, then you might want to check out Orchid Island Capital ORC, a mortgage REIT that does both. Orchid Island Capital is not your typical REIT. It is a mortgage REIT, which means it invests in mortgage-backed securities MBS that are backed by residential mortgages. These MBS are issued or guaranteed by U.S. government agencies, such as Fannie Mae, Freddie Mac, and Ginnie Mae. This means that they have very low credit risk and high liquidity. Orchid Island Capital pays a monthly dividend of $0.065 per share, which translates to a yield of 17.3% based on its current share price of $4.51. It has a history of maintaining or increasing its dividends since 2013, even during the pandemic-induced market volatility in 2020. It also has a low payout ratio of 63%, which means it retains enough earnings to reinvest in its business and grow its portfolio. If you are looking for a high-yield stock that can provide you with consistent income and exposure to the U.S. housing market, you might want to consider Orchid Island Capital ORC as one of your options. Stock 5. ARMOUR Residential REIT. Do you want to invest in a stock that can give you a whopping dividend every month? Do you want to invest in a company that has a diversified and opportunistic strategy? If yes, then you might want to check out ARMOUR Residential REIT, a mortgage REIT that does both. ARMOUR Residential REIT is not your average REIT. It is a mortgage REIT, which means it invests in mortgage-backed securities MBS that are backed by residential mortgages. It invests in both agency and non-agency MBS, which means it can take advantage of different market conditions and risk-return profiles. Agency MBS are issued or guaranteed by U.S. government agencies, such as Fannie Mae, Freddie Mac, and Ginnie Mae. They have very low credit risk and high liquidity. Non-agency MBS are issued by private entities, such as banks and other financial institutions. They have higher credit risk and lower liquidity, but also higher yields and potential capital appreciation. ARMOUR Residential REIT pays a monthly dividend of 10 cents per share, which translates to a yield of 18.5% based on its current share price of $6.48. It has a history of maintaining or increasing its dividend since 2019, even during the pandemic-induced market disruption in 2020. It also has a low payout ratio of 66%, which means it retains enough earnings to reinvest in its business and grow its portfolio. If you are looking for a high-yield stock that can provide you with consistent income and exposure to the U.S. housing market, you might want to consider ARMOUR Residential REIT as one of your options. Stock 6. San Juan Basin Royalty Trust. Do you want to invest in a stock that can give you a generous dividend every month? Do you want to invest in a company that has a long history of paying dividends since 1980? If yes, then you might want to check out San Juan Basin Royalty Trust SJD, an oil and gas royalty trust that does both. San Juan Basin Royalty Trust is not your ordinary trust. It is an oil and gas royalty trust, which means it owns mineral rights in the San Juan Basin, one of the largest natural gas fields in the U.S. It receives royalties from the production and sale of natural gas, oil, and natural gas liquids by the operators of the wells. It does not have any operating expenses or liabilities, and it distributes almost all of its income to its shareholders. San Juan Basin Royalty Trust pays a monthly dividend that varies depending on the commodity prices and production volumes. In March 2023, it paid $0.043 per share, which translates to a yield of 22.5% based on its current share price of $2.29. It has a history of paying dividends since 1980, even during the pandemic-induced market slump in 2020. It also has a low payout ratio of 49%, which means it retains enough earnings to sustain its dividend payments. If you are looking for a high-yield stock that can provide you with consistent income and exposure to the energy sector, you might want to consider San Juan Basin Royalty Trust SJD as one of your options. These are the 6 monthly dividend stocks that I think are worth investing in right now. They have high yields, stable businesses, and growth potential. They can provide you with consistent monthly income that you can use to pay your rent or achieve your financial goals. But how much do you need to invest in these stocks to earn enough money to pay your rent? Well, let's do some math. Let's assume that your rent is $2,000 per month, or $24,000 per year. Let's also assume that you invest equally in these 6 stocks, and that their dividends remain constant throughout the year. How much money do you need to invest in total to generate $24,000 in annual income? Well, the average annual return of these 6 stocks is 13.51% based on their current yields. This means that for every $100 you invest, you can expect to receive $13.51 in dividends per year. So, to generate $24,000 in annual income, you need to invest $24,000 / 0.1351 equal $177,646. That's right. You need to invest $177,646 in total to earn enough money from these 6 monthly dividend stocks to pay your rent every month. Now, I know that this might sound like a lot of money for some of you, but don't worry, because you don't have to start with this amount right away. You can start with whatever amount you can afford and gradually increase it over time. You can also reinvest your dividends to accelerate your growth. The key is to be consistent and disciplined with your investing strategy. If you do that, you will be able to create a reliable stream of income from the stock market that will pay your rent every month. And that's it for today's video, guys. I hope you enjoyed it and learned something new. If you did, please hit the like button and subscribe to my channel for more videos like this one. Thank you so much for watching, guys. I'll see you in the next video. Peace out.